Before I move forward on the technicality or the different documentations of my real estate loan, it's specifically I applied for the SBA 7A. It took me like 3 years before I even decided because I'm not sure. I'm not sure yet whether my second office is worth purchasing the building. That's why I tested the water if there are market and there's a potential. I mean, growing market on that area. I think that's one thing. That's why I leased it for 3 years, and then let's talk about COVID situation. It was really devastating. That's why it was like a back and forth decision. Then when I decided to purchase the real estate, it's not because what do you call this? I didn't purchase it to add more expenses. I did purchase it to convert my expenses to become an asset eventually, like to build some equity. That's what we are aiming for. Then instead of paying the lease or the rent monthly, why don't you just own it and then make more, find people that can rent the building. So that's why it's a win-win situation. Uh, but of course, you're going to be tied up with the long-term liability. That is something you want to consider. Whether you do you want to stay in the city, if you're planning to move somewhere, I don't think purchasing the building would be necessary at that point. Then when I started to see that it's worth it and going back is I applied, but do not give up. Do not give up because I also got denied with three different banks. It's not because you're capable. Sometimes the lender that you're working with may be inexperienced. You have to find a special SBA lender officer because SBA 7A, they guarantee the loan, which means to say worst thing scenario, the SBA will pay majority or the bigger percentage of the loan that you apply to the bank. Okay. Now, what happened is I landed the application to the fourth bank, but I think it's also important. One thing I've learned that you need to be specific when are they going to pull out your credit score, and they have to let you know if they're going to pull it out because you don't want your credit score to be pulled out and then get denied. You can ask, is there like a pre-assessment, pre-qualification before they send to the underwriter? Because when they send it to the underwriter or when they pull out your credit score, it will affect your future applications if ever you get denied to this first bank. That's why be very specific. The one thing that I've learned, be very specific when are they going to pull out the credit score, and they have to let you know. All right, so this is our part two. We're gonna go to part three. If you haven't subscribed, please click share and subscribe today. Remember, if your all of this loan requires financial statements and then your updated tax return, we are here. We bundle the service. So what are you waiting for? Book your 30-minute consultation today, and I'll talk to you soon. Stay safe.